TJ the Wheel Joe coming at you live. It is Tuesday, October the 8th, 10:25 a.m. Central Time, Texas time. I'm just going to see how many of you guys cruise on in here today so that we can do live Q&A. Also going to put the invite here for anyone that might want to join. And if we don't get anybody, then I'll just do like a regular portfolio update the way that I normally would. But this one's just going to be for members only, guys. This isn't going to be made public on the rest of the channel or anything like that. The purpose of these members only are so that you guys, so I can make sure that you guys are getting all of your questions answered. Because whenever we do a regular stream, we have people coming in from X, Twitter. We've got the regular people on the channel that watch on a regular basis, but they're not members. And I do my best to try to give everybody the time and the attention necessary in the chat. That is the one thing that I feel like the channel is known for, is that we're all about the chat. It's like this is like Wheeler's live Q&A all the time, right? So it's an open platform so that people can get their questions answered, because it's tough. It's a scary market out there for a lot of people, and I want to make sure that I could be a reliable resource for people. That way, it's like like a live version of Google, if you will. So anyway, if you guys have any questions that you feel like maybe you need clarity on, because I feel like I've answered all the questions already, right? But let's just say there's a concept that you're just unclear on, whether it's like when to roll, when to take assignment, what deltas are you looking for? Are there any technical indicators? Whatever questions you guys might have, put them in the chat and I'll address them accordingly. And also, if you are a member that is the $10 level or above, the Wheel Deal entry or above, make sure to schedule your Calendly, get on the Calendly and schedule your FaceTime. Whether it's for one time a quarter, one time a month. I know I was running a promotion there. It ends this week for the one time a week deal. And then if you're paying the $100 a month for the people that are going to be studying the Series 65 with us, those FaceTimes are one time a week. So those are the hours of the gym. I have it all on the Calendly as far as my availability and stuff. So make sure to secure a slot for you guys. And this is also the reason that I'm not going live on Tuesdays or Thursdays anymore during the day. It's because I'm going to carve out more time during those days to knock out more FaceTimes. So that's essentially the way the channel's going. It's going to be live for everyone on Monday. We'll live on the mornings. In the mornings on Tuesday, we'll be doing this deal with either Tuesday or Thursday. Whatever day just works for my schedule. Because sometimes I have to meet with clients, so I won't be able to do it on Tuesday, but I'll do it either Tuesday or Thursday, unless we're out of town. And that's going to be for members only. Wednesday, it's the double header. It's where I go the morning, and then we do the Wheelers episodes Wednesday night. Thursday, essentially nothing unless I got this going on. And then Friday is a mids channel. And then I may start doing recaps around 12 or 1 p.m. Texas time on Friday, kind of like the week that was. And if there's anything that I want to handle and not let it drag out to the weekend. So anyway, what is going on, Scar? What's going on, Daniel? Alex? What's going on, Zaban? Aaron? Mr. G? Hope you guys are doing well. Lozzie. Okay, first question, TJ. When I'm collecting fade on an option, what amount am I looking for to consider the roll? Good question. I'm just going to clarify that question and go from there. Let me take care of these real quick. I love selling puts, struggling with my mindset on stocks I'm trading. When Hood, Palantir, SoFi, etc., are all much higher than when I started trading them. What are your thoughts on end phase leading into earnings? Your expectations on earnings? I think that this is essentially their last bad quarter. I think it's blue skies and clear, clean, green stocks for end phase. I think that they'll definitely say things like, "Hey, these interest rates are going to help us. We're ramping up the orders." I expected to be a fire earnings report. That's why I started selling more cash secure puts on end phase. I got 10 of them at $100. Totally okay taking ownership at $100 of 1,000 shares, and I want to build up a 5,000 share position. I'm hoping that I can get it as low in the 90s. I don't think it's going to go there. I just don't think it's going to go there. So, anyways, let's talk about this question here, and let's like really address it. So, when I'm collecting theta on an option, what amount am I looking for to consider the rule? So, it has to do with intrinsic versus extrinsic value for me. So, let me go over here and hit present. Let me see if I can find the portfolio real quick. Okay, here we go. So let me find an example. Let me find an example of an option that has no intrinsic value, and then one that has a combination of intrinsic and extrinsic value. So for instance, this Riot cash secured put. This is a cash secured put. Obviously, we all know that this is a commitment. This is essentially a limit order on steroids, right? That is what a cash secured put is. You got paid to buy at least 100 shares of that stock on or before the expiration date. That's essentially a limit order. Limit order is you just put your money there and you're like, hey, if it hits this price, give me those shares, whether it's to buy or to sell. And here we got paid premium for doing that. So since this is above our strike price, there is no intrinsic value. So this option consists of extrinsic value. So only, which is the theta decay plus the implied volatility. Now, if we're out of the money and we are out of the money, I don't ever look to roll. It's that simple. I don't ever look to roll. The only time that I look to roll on a cash secured put, first of all, is the mindset's a little bit different on a cash secured put versus a covered call. Is on a cash secured put, I look to roll when I don't actually want to take assignment at that price. And then I'm going to look to roll whenever my break even has been breached. So let's say that Riot was tanking and I've got an agreement to buy these shares at 7, I would look to see what my break even is. In this case, it's 663. So if Riot gets to 663, that's when I'm going to look to roll if it's a cash secured put. On a covered call, if I want to keep my shares, I'm going to look to roll whenever my break even has been breached. For instance, on Hood. So on Hood earlier, because Hood's on a nice little run today, right? Or it was earlier. Let me see what it's doing. Yeah, it's still on a nice little run today. So earlier, I rolled the covered calls for right here. So I rolled these covered calls. These expired on 10/18. So I gave back $1.35, and then I collected 168 to go from 24 to 26. And add another month essentially to the contract, but I qualify for $2 more in capital appreciation on 5,000 shares. That's substantial. It's an extra $10,000 of capital appreciation that we're qualified for. So because Robinhood was at the break even, which was around 24.60 or so, that is when I chose to roll, because at that point, if you wait too long to roll, guys, it becomes harder to roll up and out for a credit. Like the deeper that you get in the hole, the deeper that you get in the money. Let's just say that I wanted to stick in this thing. Is there still extrinsic value left on the option? That's a double-edged sword. Is I can just do nothing and keep collecting the theta with the understanding that if Robinhood keeps going up and to the right, it's going to get harder for me to roll up and out for a credit because I chose to milk the theta. So what I chose to do in this instance was, no, the hell with all that. I'll give some of this theta back. I like to collect data. In this case, I'm going to pay for it. I'm going to pay for the extrinsic value that's left on the contract, and I'm going to try to pick up more capital appreciation. So I want to go, it's more important to me to go from a 24 strike to a 26 strike because all the mojo is with Robinhood. So I don't want to leave that money on the table because the capital appreciation is the loaf of the bread. The premiums are the crumbs. So keep that in mind on a covered call. On a cash secured put, it's a little bit different because if it's Riot and if it's 7 and Riot goes to like 670 and I just don't want to mess with it anymore and I'm okay with assignment, then you don't have to do anything. But if you're just like trying to avoid assignment, then you want to roll whenever your break even has been breached. A. B, though, is why are you trying to avoid assignment? If you're just constantly playing that game of I'm trying to avoid assignment, you're playing in a very stressful quadrant. And I highly recommend that you take a step back and you look at the underlines that you're selling cash secured puts on and ask yourself, if I am getting paid money to buy these shares at a discount from today's prices, why am I so opposed to taking ownership of these shares? If you can't come up with a good answer for that, then you're probably selling puts on the wrong underlying. Let me rephrase it a different way. If you aren't excited to take ownership of shares after there's been a substantial dip in the underlying, you're probably selling cash secured puts on the wrong stock because sooner or later this market is going to go against you guys. It's going to go against you. And it would behoove you to sell cash secured puts on a stock that you genuinely want to own. It's one of those things, like to me, a cash secured put's like, if it dips to that price, like I'm buying it. Like I'm buying it. I'm going heavy. I'm backing up the truck. It's all that stuff. That's what just about every cash secured put is in my portfolio. That's why I don't freak out because I was like, dude, if it had been trading at those prices, this is what a cash secured put is in my mind, layman's terms. If the stock was already trading at those prices, I wouldn't be selling the put. I would just be buying the shares outright. Let me say it again. This is TJ the Wheel Deal's mindset for a cash secured put. If the share price was already at that strike price, I wouldn't have even sold the put. I would have just as soon owned the shares, sold cover calls against those shares to protect myself for the downside that way, manage those, and I'm essentially playing for the stock to go up because I don't know that it's the bottom, but it's bottom enough for me. Like that's the mindset. It's like, like Riot at 7, SoFi at 7 or 8. Like, you don't have to monitor this shit. I don't have to monitor it, guys. I want to own more shares at those prices. Hope that helps you guys out. Hopefully there's some more questions here. Hey, what's going on, Tokyo? Super cool. Super cool. Let's talk about this one right here. I love selling puts. Struggling with my mindset on stocks that I'm trading when Hood, Palantir, and SoFi, etc., are all much higher than when I first started trading them. Here's the thing: you're out there, you're buying clothes, you're buying a house, you're buying a car, and you've already accumulated some of those possessions, so you know what you paid for them, and now everything goes up in value. COVID happens, the chips are hard to come by, so they can't produce cars, etc. And now all of a sudden, all of these cars are marked up 10, 20, sometimes 30, 40%. And you're like, shit, I need a new car. But you're like, I don't want to pay $80,000 for a Ford F-150 when I bought mine for like 62. You're like, nah, I don't want to do that. So it's like, but I can't really wait because I really need a new car, right? So we're in the business of selling cash secured puts and covered calls. That's why I like to do it on the same stocks over and over and over again, because I'm going to get familiar with where they were trading, what I was paying for them before. But you also have to look at, is the company more valuable today than it was when you first got in? In other words, look at the underlying. Is Hood a much better company today at 25 than it was at 10 or 11 when you first started trading it, as an example? Is Palantir a much better situation today with all that we know about the company, even though it's trading at 40 bucks versus at 10 bucks? I don't know. That's for you to decide. I'd rather deal with it at 10, but keep in mind the sentiment sucked at 10. See, we didn't have anybody that was super eager to get on the Palantir hype train at 10. That's why it was a much harder buy at 10. So oftentimes I ask myself, whenever the mojo is with the stock, even though it's trading at valuations that are a little bit inflated in comparison to what we would like, sometimes it's easier to make money at a higher valuation than at a lower valuation. And I know that sounds ass backwards, but guys, that is where people always say the trend is your friend. Like, it's been easier for people to make money from 20 to 40 in Palantir than it was for people to stick it out from 10 to 20. It's the same double, right? Same double. One took more capital, obviously, but it's because the story was better. The numbers got better. AIP Con, they learned how to sell their shit. All of those things got better. So you got to take it all into context, if that makes sense. Same thing with SoFi. Man, SoFi was hard to buy in that $4.50 range if you didn't follow the company closely. But we all knew that 4 quarters of GAAP profitability was a foregone conclusion. That's obviously going to come to fruition here, I think, on the 29th, whenever they have earnings or whatever of this month. It's going to be awesome. So a lot of people knew that. A lot of people knew that about SoFi a year and a half, 2 years ago, when the stock was really, really depressed. And they've already gotten their double. Now they're waiting on another one and another one. But, the people that got in early, at like $20, $17.50, something like that, 22 bucks, they're still like, man, shit, I've averaged down. I'm still sitting on a $14 average or whatever. It's tougher for them. But that's what the market is. So that's why I just like to sell put, sell cost, collect premium, do it on the same handful of stocks. That way, it's just all about credits and debits. I'm going to look up what's the debit. It's how much did you pay for all the shares? That's the biggest debit. And then you're going to stack up all your credits, all the cash secured puts, all the cover calls, all the roll credits. And then, anything that you gave back to buy back options, that's going to go on the debit side. So you're just going to add up all your credits. You're going to add all of your debits. You're going to get a number, whatever that coefficient is. Let's say it's $70,000. You're going to take the amount of shares divided by that number, and that's going to give you your adjusted cost basis. The wheel tracker does all this for you. And that is why I just focus on what game am I playing. The game is I want to lower the adjusted cost basis to 0. Sometimes the market gives you good prices. Sometimes the market gives you great prices. Sometimes the market gives you not so good prices. You just got to, kind of roll with the punches. Hopefully that helps you, Mr. G. What's going on, MK? What are your thoughts on Enphase? I already talked about that one. TJ, has the hood ship sell done? No. I think it's just getting started. They just announced the Investor Day. Market sentiment's a real big thing, guys. I've been studying the metrics on Robinhood. I think that by the year 2030, if Robinhood keeps hitting on all their metrics, I expect that right now, all things being equal, the way that they're trading right now and all that stuff, not taking into account potential splits or anything of the sort, I think Robinhood could legitimately go to about $100 per share by the year 2030. So that's not bad. That's not bad. So it's about a 4x, 3x, 4x on your money from here. The story's getting better. The company's getting strong. They're very, very innovative. So it's just getting started, guys. This is when the big money likes to get in. It's when the story was been told. They weren't really buying the story. They want to wait for the numbers to support that story, to substantiate that story. They want to wait for everything to unfold. And whenever it starts unfolding, they're like, okay, now we'll get in. It's kind of like, we like to get in on the rookie contract deal of these quarterbacks. The big money doesn't like to get in until they play through that rookie deal. They're giving you a solid 2 or 3 or 4 years in the league. I don't care if they've already won 1 or 2 Super Bowls. They're not willing to give them the big money those first 2 or 3 or 4 years in the NFL. The really big money comes in the second and your third contract. Same thing in the NBA. That's why the rookie deals are here, and then the veteran deals, the Steph Curry deals, the LeBron James deals, the Kevin Durant deals are over here. The Tom Brady deals were here. Unfortunately, the Dak Prescott deals were up here, but they didn't get the same money in their rookie contract. Now, remember when they used to always say that Dak Prescott was the most underpaid player in the NFL during his rookie contract, and now I'm saying he's the most overpaid player on this latest contract. And that is the way institutional investors look at the stock market. They don't like companies in their rookie deals. They're like, prove yourself to your veteran status. If you're not just going to be a one-hit wonder, if you will, and then we'll pump the big money. Hopefully that analogy helps you guys out, but that's the way that I look at investing. Is like, is this company in the rookie stages, or is it graduating to veteran stages, and it's going to command that multiple because the market trusts it more? You know, like a year or two ago, nobody was trusting Robinhood. Nobody was trusting SoFi. They're still not trusting SoFi. They're on the verge of, in my opinion, and nobody was trusting Palantir. And then boom, things started clicking. So now all the big money comes, and that's why these companies can pump higher and higher and higher. Where else are we going? What's going on, Ed? Jason Nasto, 25 covered call on Palantir expiring 12/20/24, 870 average price. I would love to keep the shares. What would you do? Not financial advice. I look to roll. I would look to roll. So the question is, are you going to be able to fix this entire roll in one shot? The answer is probably no. But just looking at it without pulling up the option chain, and I'll do that in just a second. But just looking at it, I would formulate a game plan. What's the game plan? To me, I'd be okay adding a year to the contract if I can get $5 in capital appreciation. So if I can go from 25 to 30 and it didn't cost me any money, to me, that $5 of capital appreciation, the math is probably going to work there, because you're going to have to leave that collateral tied up for another year. And why 30? Because even if there's a big pullback in the market, I think that 30 is going to be a level that's going to be very difficult for Palantir to hit. So I wouldn't be all crazy trying to roll from like 25 to 40 for a massive debit or anything like that. So my game plan would be, can I go from 25 to 30 and I'm okay adding a year? And if it doesn't cost me any money, that's great. If it costs me a little bit of money, I have to do the math. So let's see what that looks like. Let's see what that looks like, guys. Let me know if y'all like the format so far, guys, because I'm going to really dig into these questions. That's why I'm going to try, that's why it's members only, right? And I'm hoping there's only like a handful of 7 to 10 questions so we can really get into these things and we can all learn together. So $25 covered call, Palantir. So let's look at Palantir. So let's look at old Palantir. Oh man, it is crushing it, right? So we got $25 covered call. I sure wish I had a $25 covered call for January. Mine's at 12. So it's 101 days away. So you still have some extrinsic value there based on the time, but because you're so deep in the money, there might not be a lot of extrinsic value there, actually. So it's like this. So the options price is $16.40. So what does that mean? What does that mean? That options price consists of intrinsic plus extrinsic value. So if you've got a 25 strike, the current share price is $40.80. You subtract the 25 from the 40.80, and that's your intrinsic value. So in this case, that's going to be $15.80. So this options price, $15.80, is the moneyness of the contract. That is the intrinsic value in the contract. So there's only 60 cents of extrinsic value. So what does that mean? You don't have a lot of protection, meaning that 60 cents, that's the only protection you have of having these shares called away from you prematurely, because that's the profit that the counterparty would have to relinquish if they want to own your shares right here, right now. So keep that in mind. You don't have a lot to work with here. So I would consider trying to roll this contract here within the next 2 to 4 weeks. That's just me. So now we got to look at, okay, the options price is 1640, 1645. So now we're going to start working our way out, and then we'll try to work our way back in. So I was already comfortable going January 2026, and the idea was to go to 30 bucks. So is 30 bucks more than the 1640? No, but it's not that much less. So essentially, you would have to give back $35 a contract to gain $5 in capital appreciation. So you just got to do that math to see if that works out. Or if you wanted to roll up for a credit, because you're like, yeah, I think Palantir could pull back. And then, so I want to be greedy with the premiums. Then you can go over here to $17.95, and now you're going to be getting about $1.40, $1.50 per contract to roll it. And now you're qualified all the way to 27. You go from 25 to 27. So that's what's called a Band-Aid trade. You didn't really fix the problem, but you kind of gave time to let the investment thesis play out. If your thesis is that Palantir might come back. Now, if you're just absolutely headstrong and you believe that Palantir is going to keep going up, then one other thing that you could do is you could just buy back the covered call, let it run, and then sell covered calls in the $45, $50 range down the road. But that's a real huge risk that I don't recommend. So, you're like, well, I don't want to add that much time to the contract. Well, then you just start playing with these ideas. You're like, okay, well, look at the options chain. Like, what could I do, 220 days out? What does 30 look like? You're giving back a lot of money now. It's costing you $3 and you're only gaining 5. So the net positive is like $2. So that math doesn't really work. So the only thing that you could probably do there is you can go from 25 to 28. That's kind of reasonable, but I just don't really think the maths. So you just got to look at what makes sense for you financially. The only one that makes sense for me in my mind is to go over here and put a 30 handle on it and call life good. And I've been in these jams so much, so I could kind of I already knew that was going to have to be the play mathematically. On a pullback, on a little bit of a pullback, you might be able to do this for even credit. So that's one that might work for you. You still want to be in this trade, or you'd be much happier at 30 bucks. If you had to sell the shares at 30, you'd be much happier selling them at 30 than at 25. That's a lot of money. It's $500 a contract. Hope that helps you. Let me keep going over here. What's going on, Megan? What's going on, Mitch? All of my assignments have made me huge profits this year. That is absolutely awesome. Sold cover calls on Hood, and that's it so far. Yeah, man, Hood is a rough one. Appreciate you, Daniel. Yes, I meant calls. Sorry. I'm legit considering buying 10,000 shares of e.l.f. Man, I've been looking at this company a lot. I was talking to Bill about it yesterday. Bill White. I was talking to him on a text, via text. e.l.f. is still not cheap. e.l.f. is still not cheap. It's just cheap in comparison to where it was, right? So keep that in mind. So let's look at e.l.f. real quickly. We got time. So let me look at e.l.f. real quickly. So I've got a hard stop at 11:30 today, just so you guys know. So let's look at e.l.f. real quickly. We'll look at alpha spread here. We'll look at e.l.f. Oh, e.l.f. Beauty. See, according to this thing here, it's got an intrinsic value of 94.15. And the way that I've got these parameters here, it's very, very conservative. So keep that in mind. Keep that in mind. There's back tests there to see whether or not you think that it's been overvalued for a while. I mean, just look at this thing. I mean, this thing went on an absolute tear, guys. It went on an absolute tear. Here's the double top, and then it's been crashing ever since. I really think it needs to hold this support right here at that $95 range. And if it doesn't, I don't know where it's going to hold support. I mean, I just don't know where it's going to hold support. And you got to also look at it. In 5 years, in the 5 years, it's up 480%. So just keep all those things in mind, okay? Uh, obviously, according to Wall Street estimates, things look really, really good. We all know that the company is not going to go out of business. We all know people are going to keep using makeup and all that stuff, right? So the annual revenue is going up and to the right, or those are the forecasts anyway, because this is where we're at right now. But it looks like it's in the next 10 years or so, it's practically going to double in revenue. So it's not like the crazy kind of growth rate here, because as the company gets bigger, it stands to reason that it's not going to be able to grow hand over fist anymore. It's a larger company now, right? But the operating income is going up. The net income is good. Net income is always good with the company. It's a profitable company. Operating cash flow, investing cash flow, not no bueno there. Financing cash flow. And then here it tells you revenue and expenses breakdown. I mean, this thing is just really, really, really cool. Balance sheet decomposition. You've got a lot of assets. It's about a 2-to-1 on the ratios. So they could essentially pay off all of they have cash and short-term investments of 109 million. They got receivables of 159, other assets 265. So I don't think they can necessarily like pay off all their debt, but if they liquidated the company, obviously there would be a debt-free company worth about $500 million. So it's okay. And this is where you got to like really start digging into the company and figuring now they have really, really good margins on gross margins that they've been maintaining, very healthy margins. So that part's real good. All of this looks pretty decent, pretty decent. And then on their free cash flow analysis, this here is, you want to keep seeing everything go up and to the right, and that isn't quite happening. So that is where you have to like dig in, right? You got to dig in, because numbers without knowing the story, they're not going to make any sense. And stories without numbers, well, it's like a fairy tale, right? So e.l.f. Beauty had a stellar start to fiscal year 25, with Q1 net sales up 50% year over year, driven by strong growth across both national and international retailers, as well as digital commerce. The company has also achieved an 80 basis point increase in gross margins to 71%. Adjusted EBITDA was 77 million, up 4%. They raised their fiscal 25 outlook, now expecting 25 to 27% net sales growth, up from 20 to 22%, and adjusted EBITDA of 297 to 301 million, up from 285 to 289 million previously. Their focus areas include color cosmetics, skincare, and international expansion, with substantial market share gains in key categories and regions. So things look good. I mean, to me, things look good. I'd probably be looking to sell puts in the $95 range, take ownership at 90, and write the damn shares up. The premiums are really, really good too. So that is one thing that makes it very, 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 very compelling. Very compelling. It's compelling. Just be careful. Just be careful. If I was going to just like buy shares outright, I would be selling very aggressive cover calls, like pretty much at the money, and just using that cover call premium as protection of the downside. That's the way that I would play if I was hell bent on owning the shares right here, right now. Can I explain it any better? Appreciate you. Helped a lot. Thank you, TJ. You're welcome. Mitch, TJ, let's say you rolled for a credit of 100 from round numbers, but now let's say you closed early and gave back $50. Do you have any trigger system built in that lets you know automatically when you are green if you close early? Yeah, the wheel tracker helps you. The wheel tracker helps you. Was thinking about today, that is a useful code to build. So on the wheel tracker, it comes down to like your adjusted cost basis. And because you're able to follow all the trades on the wheel tracker. So for instance, let's follow Hood, for instance. So here's the wheel tracker. So let me see if I can just make this slightly for you guys for this example. Hopefully you guys can see that pretty decently. Let me see if I can make it just a little bit. Okay, hopefully that helps you guys. So let's follow this covered call, right? Because I rolled the covered call for a negative. So essentially, there was a covered call that we had for 1018. We had collected 2450, gave back 6750. That was the debit. And then we collected 8400, right? So essentially, if we look at all of that right there, then we go over here to the investing platform and we look at the Robinhood trade. If I look at the Robinhood trade, it was for November. It's going to tell me what the roll credit was, 1650. So I look at that 1650, and then I go back to this guy here. So remember 1650, and then I go to the original roll, which was 2450. So I know that 2450 plus 1650, that is how much total credits were received. But if I go to this contract right here, it's going to say that the value of this contract is probably in the neighborhood of 8 to 10,000. I bet. Yeah, 9,700. So I already know that unless I can pay back less than the total credits received, I'm always going to be underwater on this contract. So the only thing that can save me is for Robinhood to trade sideways for a while and time to come off the clock. If Robinhood keeps climbing, then every time that I roll, I'm going to keep going deeper and deeper and deeper and deeper into the hole. So that's why it's real important to have a tracking mechanism that you can look at, because those numbers, they're not going to be accurate, because let's just say that I only have to give back $5,000. It's going to make it look like I'm winning 50% on that trade. But in actuality, that's not true. I wouldn't even be at break even yet. So I think it's real important to know. I don't know if there's like an actual metric that we could put on the tracker that would let us know, hey, this is how much you got to give back so that you're profitable on this trade overall. So it's a little bit of manual labor, but that's the way that I have to do it. What's going on, Jill? What's going on, Shimpasta? I've been using Hood since 2018, right on. It was nothing of a platform. It is today, and others than easy to use. Exactly. And now it's like becoming very, very useful. Appreciate you guys. I hope you guys are liking this format. Why were your 12? Were your $12 cover calls not? Because I have no idea if the counterparty. First of all, I don't know that I don't think you're matched up with like the same person the whole time. I don't think that's how it works. In fact, I know that's not how it works. But it's because they already have that contract to buy them in January. So what's the rush to buy them now? Like, what's the rush to own them now? That's the theory. Like, it's not a dividend paying stock. They paid for all that time, all that theta, all that extrinsic value. So they probably just want to get their money's worth. I don't know. The other thing that I can think of is the majority of contracts, they don't get exercised, right? They don't get exercised. So that's the other thing that I'm kind of like thinking of. I don't know. I mean, I'm kind of surprised, but also not really. I mean, because Palantir is not a dividend paying stock. So at the end of the day, people don't have an incentive to own it right here, right now. And, I'm hoping that it could stay on there for another month or two, and there's like a pullback to like 35. I might be able to salvage those 5,000 shares, but I highly doubt it. What is the delta on that Palantir put? Probably like 99. Probably like, are you talking about the put or the covered call? I think it's like 99. Oh gosh, where is it? $12 call. I like this format, guys. It's very, very relaxed for me and doesn't put a lot of pressure on me. Yeah, 99 delta. That's crazy. It's just nuts, man. It's absolutely nuts. Where are we at here? Appreciate you guys. That is crazy. Yeah, I'd be curious to see where that free cash flow is going. They should be set up to lower expenses as opposed to them growing. Right now. Appreciate it. Hey, TJ, to add a ticker, tap on the tracker. That's a Bill White question. There is a video. There is a video on the channel. Let me see if I can find it for you guys. And he talks about, he shows people how to do it. So YouTube Studio. So we're going to go content. We're going to go videos. So right here, how to update the wheel tracker.
To keep open while you trade. So it's about the astonishing.
All right, guys, here's how you update the tracker. Whatever tab you're on, and you want to update a ticker, you go to this little house in the upper left-hand corner, right-click, Smart Lookup. Look for the ticker that you want. Put it in Palantir. Whatever one is from the New York Stock Exchange, you're going to click on Insert Data tab and X out of there. And then as you see, the price still hasn't updated. Double click into that cell, hit enter. It'll update the price for you, and it'll also update the ticker over here, and that's what flows through to the rest of the tabs. So as you can see, the first tab that I updated will be Palantir now. On the overview, it also says Palantir. Just a quick reminder that you need Microsoft 365 to get live pricing on all the tickers. Let TJ know if you have any additional questions. Thanks.
And then this is also introduction of the wheel tracker right here.
Leo coming at you with a really special podcast for you guys. This is
that entire
Troy Hutchcraft on the.
They're there. So you just got to go out there and get the info. Get the info. Oh, wow. Very, very cool. Very cool. Welcome to the channel, Mav. Wait, why is my Wheeldeal logo so little while everyone else has a colored and bright one? I have no idea. Yours looks the same on mine. So in case that lets you know anything. Anyway, appreciate you guys. What else we got here? Farah's deck. Thoughts on Celsius cash grip puts? It's close to a major support level. Cash grip puts for 28. October the 18th, if a signed sell best curve calls for a few weeks lower cost base, my deal number is 25. It's a good strategy. It's a good strategy. Again, texted with Bill White about this last night. Celsius was an amazing growth story there for a while, but the reality is that growth is now calmed down to more realistic levels that are more sustainable for the long term. So I think that a good course of action is to sell some cash secured puts, and I wouldn't take assignment at 28 or 27. I would just keep rolling and rolling and rolling, wait for the uptrend, and then take ownership whenever the momentum has changed for not just stock, but for the company. Because it's like the stock's one thing and the company's another thing, but these things are kind of mirroring each other. Right now, the sentiment's not that good for the company. So it stands to reason that the sentiment for the stock is kind of in a shitter, and it kind of like just essentially it priced in unrealistic, unsustainable growth, in my opinion. I think in the low to mid 20s is where Celsius deserves to be trading. And I liked it. I liked it in the 50s, guys. I liked it in the 40s. I thought it made 0 cents at 95. So I think it'd be okay. I think it'd be okay to start building a position, but I wouldn't go real heavy until we get confirmation that things are going to be going up and to the right again for the company. And they are going up and to the right, but I'm saying like the international expansion, I think that's kind of going to be the big key for the company, in my opinion. And so I don't use Robinhood cost basis alone yet and ask them to have a better cost base. It only changes when you buy nuts. Do you like the massage chair in the background? I do. It's a little bit aggressive. I'm still learning how to use it. It has like a lot of like the air pressure and stuff. It's really good. It has like this stretching mechanism on your calves and your feet, or those the things on the bottom right here. These guys here move up and down, and it like stretches out your calves, and it feels really good. These balloons or whatever, these airbags where you stick your arms in, and also on your calves, and that feels really good. It's got some sort of technology where like it rolls up and down your spine, so it kind of like sees how you're built and it'll like adjust accordingly. Yeah, it's pretty badass. I got it. It's called Relax. I just googled best massage chairs under $5,000. And this is the one that came up. It's because the Relax. There's different levels. I got the best one they sell, or the most expensive one. I don't know if it's the best one, but it was like 30 something hundred. I forgot what it was. Like maybe 3,500, 3,800, something like that. And it's 0 interest if you qualify through a firm. And I think it's like $130 a month. So I didn't see any reason to pay cash for it when they weren't charging us any interest. No worries, though. No need to go back. Call for sure. Thanks for teaching. Amazing. I don't have that house icon top left that he uses. Yeah, I'm not sure. We'll have to ask Bill. And hopefully I can have him on one of these, and he could help us out a little bit. What's going on, Will? What's going on, Daniel? Love it. Bill White, so smart. Just commenting to see my Real Deal logo. Y'all are crazy. Logo size corresponds to month. Oh, that makes sense. I think you got to wait for a positive cue from Celsius before getting in. It's down so much. You're not going to miss much. That's fair. How are your honest options? I don't have any options on honest. Thank you, MK. Yeah, I am honestly not in honest. Looked at it a couple of times. I think Jeremy, is that financial education? Dude, he bought a sweet freaking Ferrari. Did you guys see that? I think it's called the Roma or something like that. My goodness, man. My goodness. Beautiful car. TG, you always say the best time to roll cover call that's in the money is when your break even is breached. Is that the case no matter how far out the expiration date is, even if it's months out? Good question. Yes, if your goal is to capture more upside capital appreciation. Mathematically, not so much if you want to just like, hey, I've collected all this premium and there's no risk of early assignment and I want to play that game, then that's okay. But that's how those $12 covered calls on Palantir happen. Because I played that game. If I would have just kept rolling, and I'd probably already have like a 25 handle on it. It'd probably be for like 2026 already, right? Just to know that too. So there's no magical way, man. There's no magical way to fix covered calls without adding so much time or rolling for debits if the stock just keeps going on a moonshot. Those are just the realities, man, unfortunately. Yeah, he's doing well. He's doing well. He was the OG financial YouTuber and a Buffett head, right on. I've watched that shit. I probably watched 15, 20 videos of Jeremy back in the day. I like his take on the macros. And I like his format. He does like a little PowerPoint type thing, I guess. And he's just sitting there in his garage or the backyard or the kitchen, and he's just like talking through the slides, if you will. It's very basic, but kind of gets the job done. And he's essentially just buy, hold, and hope, and it works for him. He's not, there's no special effects or anything like that. It's very straightforward. He had a rift with Paul from Everything Money for a while, and I think they were able to like hash it out because Paul likes to talk a lot of shit, right? Paul comes from a very wealthy family. He's very well to do. He's a really smart guy, Paul Gabriel from Everything Money, but he does like talk like. I think Paul gets off to being the smartest guy in the room, and that's just like not my thing, and oftentimes Paul probably is the smartest guy in the room, but Paul doesn't have the genetic makeup that I have. Like, there's no way that Paul would have success wheeling the kind of stocks that I feel. He just, he stays in his lane and I stay in mine. And I think if he gave us both $1 million, I would outperform the living fuck out of Paul Gabriel. Y'all can tell him I said. So he had a challenge for Jeremy. He'd never give me that fucking challenge. I'd take his fucking money so quick. And we ain't giving it to charity, motherfucker. That's all my money. So, anyway, I would love one of these fucking furus to give me one of those challenges. Fuck, man. They don't have the genetic makeup that I do. They ain't gonna go be making money on Neo. So anyway, what else do we got going on here? Will Robson, does anyone know if there's a catalyst for this Palantir move day other than technical price discovery? I don't know. The guy was on CNBC earlier. What's his name? Satar, Fafar. What's his name? The Indian dude. He was on CNBC talking about like Palantir's role in like elections and war and all that stuff. So maybe that. I just think more people are hearing about it. The market sentiment's really good. The airwaves are giving them a lot of love. The CNBCs of the world. And it's also been able to handle all of these sales from Alex Karp and Peter Thiel. Pretty impressive, actually. That's being the company tag that has house logo. You right click, 2-finger click on a trackpad, choose data type, choose change, type the ticker symbol in the search box, selects. He got mixed up with the COVID, but he's back. Paul means well. Yeah, I like Paul, man. He gave a really, really good analogy, one that I use often, and it's about like the rookie quarterbacks. Like we have like this guy in high school, and he's really, really promising. You don't just give him the crazy contract. You wait till he performs. And that's kind of the way that he looks at stocks, because he's essentially a value investor. So he wants to make sure that these companies are like more like proven commodities, right? And there's nothing wrong with that. Nothing wrong with that. So I've watched probably 10 of their videos. Now I haven't watched any lately, but if I do watch them now, I essentially just fast forward to the part to where they say what he would pay. Because it's like the rest of the time I feel like he's just trying to sell me the damn software. And I messaged them and I was like, hey, I would like to buy the software if I could show it on the channel. They never responded. So I was like, okay, cool. Fuck you then. I mean, it's just one of those things, right? Like, I mean, I would like to use the software. I thought there was value in the software. You got to learn how to plug in the numbers, because if not, well, it's like anything else. It's like a DCF model. You can't plug in the numbers. It's freaking useless, right? So you have to learn how to plug in those numbers, because it's just your best guess. It's a guesstimate. And but I would like to have used the software on this channel with their permission, but I couldn't get the okay from them. So they don't have a customer. Yeah, I agree too. SAS. Hey, I bought 130 NVIDIA covered calls. Won't keep the shares, worried about this getting too far in the money. Thinking of rolling out in November, December earnings. Your thoughts? So you sold covered calls on NVIDIA. I think I rolled some today on NVIDIA, or was that on a different account? Let me check. I feel like I rolled NVIDIA covered calls today. Where I want to say I rolled them for after the election. Yeah, right here. Here it is. These were at 128. These were at 128. Let me make sure I'm showing the right. Let me go present, share screen. NVIDIA. Yeah, so I rolled these. These were 128s right here. So I went from 128 to 130 again. It had just breached my break even. So I was like, well, let me kick the can down the road. I won't be able to get ahead of the stock, but that's okay because I'm actually considering selling these shares. So I went from 128 to 130, got 975 bucks, qualify for another $2 of capital appreciation on 500 shares. You know, it's not the worst thing, right? An extra grand. So I was cool with that, you know, because that's an extra 1,975 bucks from my trouble. And I'm able to go through another earnings with them. They go to like 140, 145. That's awesome. I can continue to kick this can down the road a month at a time, maybe increase my strike by $1 or $2, then make a decision, you know, make a decision whether or not I want to continue to own those shares. And because right now I have them at 125. But when we first bought shares, it was like at 132, you know, so it wasn't like the greatest entry point. So we've been underwater on these shares a lot, like, or, you know, since we got into this trade and sold quite a bit of cash secured puts along the way. This is like the fourth cycle on covered calls. So I feel pretty good about just letting these shares go right here at 130. If it were to like stay at these levels, but if it were to go to like 140, well, then I would try to milk another $2 or $3 of capital appreciation. So I think those are the things you want to ask yourself is, are you okay letting the shares go? If not, well, then what's your strategy? You just want to keep rolling out and up, get another dollar, two, and then eventually selling those shares? Or do you just want to keep rolling because you don't want to sell the shares? You know, only you can answer those questions for yourself. Well, he can come out. He can come off as that for sure. How much money would Jeremy have made if he did sell cash secured puts and covered call? I estimate he'd make at least another $500,000 to $1 million a year. I would say something like that. Shyam Sankar, yes, he was on CNBC earlier. TJ, thought on getting involved in Intel now, and how would you do it? Sell puts or buy the stock and sell? I would sell put, $20, like $20. Also, Palantir is in the index now, so S&P is up. Yeah, that's also true. Also true. Hey, can you help me think through what's an appropriate amount of options collateral to use for margin? So I like to use, if they give you $1 million, I wouldn't go more than 500,000. So right now I'm exceeding that rule because there's money that's in transit. So that is why I'm playing a little bit bigger than I normally would. So right now the margin total is 3.8. So I would normally do like 1.7, 1.8, something like that. Here I'm doing a lot more because there's $750,000 in transit. So I feel like that's going to affect the amount of margin that they give me. So I'll end up being still a little bit heavy, but I also look at, you know, this one's going to expire. That's 280 grand right there. This is 100 grand. Probably not going to get assigned there. There's other puts and everything else is for January. And there's nothing really pressing there aside from the riot, not 9 and 10s. But by that time, I think that we're really going to be in the bull market for the Bitcoin. So I think those are going to expire worthless. And then there's 800,000 of that. That's SoFi. I mean, this shit ain't going to get assigned, I don't think. So, you know, that's the reason that I'm selling so many cash secured puts on margin right now. Where else are we at? Sorry, I forgot this week. TJ, what's your take on him? Seems to have good margins, increasing profits, and very positive retail sentiment. Premiums look pretty good too. Yes, I've made money on him, guys. I made money on him. Not a lot. Could have made a lot more. Wong, I think it was technical trader Wong at the time. He's changed his name 2 or 3 times. I think he's like Wong Invest now. I'm not sure. He brought it to my attention when it was like in the $7-8 range. It's when I was doing the challenge on my wife's account. And I just didn't want to really investigate the company. But there's a lot of smart people in that stock right now. I'm pretty sure it's got legs and stuff. I don't really care for their CEO. He's like a mini Elon Musk as far as how political he is. but he doesn't have nearly the clout that Elon Musk has. So that was the main reason that I didn't want to like get into the stock too much, because I was like, I just don't want to deal with all that shit. That being said, I think the company's great. I think they have good margins. They have a good balance sheet, and I'm pretty sure you can make money in it. There's a pretty substantial pullback. Also, another round of puts, but that's about it. I don't ever see me owning any shares. I have in the money and video card calls for this week as well. Not worried if it gets called, we'll turn around and sell cash or puts. Nothing wrong with that. NVIDIA is very volatile with several dips. If it runs, we'll move. Yeah, for sure. I typically use as much margin I can realistically cover. It has made a huge difference in the amount of premiums I can collect. You can easily get drunk off it and put yourself in a hole. Absolute facts. I got 100,000 in margin and only using 2K. Scared chicken. I wear it with a badge. Yeah, I definitely would increase that to like 20,000. But again, do you, right? Do whatever works for you. But I would be looking to make an extra $2,000 or $3,000 a month with all that margin. But again, I'm obviously a lot more aggressive, and I have the finances to. You have a lot of financial backing. Palantir closing on, yeah, that's pretty awesome. Would you advise keeping a different portfolio for buy and hold position speculative plays without an options chain, or keep it all in one place in order to maximize margin availability? I don't have it all in one place because it's too uncomfortable. It's too uncomfortable, but a lot of people do. And then there's some people that are just like, they keep that shit separate. So, a lot of my money is still locked up in 401ks and IRAs and SEPs and stuff till I'm 59 and a half years old. So I'm not going to be able to do anything with that money substantially for another 10 years, for another 10 years. So it'd be cool. I'd like to be able to put an extra $3 million into Robinhood overnight. But I just can't do it right now. I don't know if there's a way I could do it, because I think about it all the time. Just because I want to have the largest portfolio on YouTube. No, it's fucking silly. But because I know me, Kevin's got like over 20 million, and I definitely have more money than Jeremy. He's got a cooler car. You could argue the Panamera is pretty badass too. And I don't know how new the Ferrari is, but it's a fucking Ferrari, right? How much of margin can I safely use wheeling? It just depends on your comfort level and your skill level, man. It depends on, are you comfortable rolling, etc. Do you care about being leveraged in a stock, or does it mainly depend on the potential you see in certain ones over others that, yeah. It just depends on all of that. It depends on all of those factors. So right now there's 66% ownership. Let me see if I can pull this up. So I was doing this last night. So here's Ahmed always talking about Robinhood and everything else. So here's the thing. Where'd I go? Right here. Here we go. So here's the breakdown. Here's the breakdown of the portfolio. So I try to stay at 50% stock ownership. I'll be cutting some shares loose by the end of the year. Cash secure puts grow my account steadily and are way easier for me to manage. So I've got 66% ownership in stocks, 30% options, 3% ETFs, and less than 1% in crypto. And then these are it's all like finance, tech, media, and telecom, consumer goods, business, manufacturing materials, right? Those are all the companies. So I just, I'm looking to sell stocks. Because I just feel like it's easier to grow the portfolio with cash secured puts. So I want to have the top 10 stocks, which is 1, 2, 3, 4, 5, 6, 7, 8, 9. So it ends with BITX. So then TSLL, Open Door, CrowdStrike, NVIDIA, and American Airlines essentially are swing trades. And then I could argue that VITX is also a swing trade. So I may try to graduate NVIDIA or CrowdStrike into the top 10 if the opportunity presents itself. But I'm not sure if that's able to happen. I've considered even American Airlines, but I mean, this is just not as solid of a company as these guys right here. It definitely wouldn't be open to it. This is a swing trade. So all of these are here on the bottom are swing trades, but I'm trying to graduate one of these, possibly two, to be investments because I can see a world where Intel is not going to be in there anymore. And that's the last thing I'll leave you guys with is I rolled covered calls on Intel today that were out of the money. So I don't normally do that, but the reason that I did is because I wanted to capture more upside. I was at 25 bucks and I wanted to protect myself against Intel tanking. So I went from 25 to 26 and I got a cool $10,000 bill for doing it, $10,800 for doing it. So I rolled from 25 strike to 26 strike, added a month to the contract, and now I'm on easy street because I'm essentially would be at like my break even for the entire position at 26 bucks. And considering how in the hole I've been in this position, I just thought it was a good time to handle that. And now I'm like, I got 2,800 on the first batch of covered calls. Then I got the 10,000 and some change. So here in about a month, if Intel is under 26, I'm going to look up and I'm going to be at like 80, 85% profit. And then I'll be able to do it again and maybe go from 26 to 27. And hallelujah, we're almost there. You know, it all sounds good to say. It all has to work out, right? But I just can't wait till I'm able to sell covered calls at 27, 28 bucks and eventually maybe free up all of that cash because that would get me under that 50% stock ownership that I'm looking for. And you know, maybe keep putting that money into Hood. I don't know. We'll see. Because that's one that I'm definitely excited to keep building out. Obviously not at these levels. I would have rather got them at 22 and some change. But the position's looking pretty good, you know, and then we've got the 26 covered calls. We got 5,000 shares that are free to run. And then I closed out the $21 cash secured puts over here today. So gave back $900 to free up 210 grand. So that's everything that's going on with the portfolio in a nutshell, guys. So you guys are seeing stuff that is not on the channel right now for everyone else to see so that I can spend more time answering some of y'all's questions. Show us a pic of your Porsche sometime. I don't know if, do I have pictures on here? One second. So I feel like it's my Porsche from the standpoint that's under my credit, my wife's co-signer or the co-borrower, but it's her car. She always says it's my Porsche, meaning her Porsche. And I'm like, well, we're married, isn't it ours? And she don't look at it that way. I'm trying to find it on my phone here. Where's that stupid car at? There's only a side view of it. It's from when I was in the garage. I don't know if you guys can see it there. It's a Porsche Panamera, black on black. It's cool. It's 2024. It's got the nice black wheels, like a chocolate brown interior. Cool car, man. It's a cool car. It feels like it's on rails. And I got the motorcycle. Let's not forget about the motorcycle. Let me pull that up. That's my baby. So here's the motorcycle. I've got a sports chief. It's called an Indian sports chief. And it's cool. And then I got my this is Jeremiah's little car when we bought it. The little Tesla, the Model Y, we call it the egg. And then I've got the little gym. That's what I'm most proud of right there. And I work out 30 to 45 minutes a day, guys. And it is just awesome. Absolutely awesome. And I have been using the massage chair probably about 30 minutes a day since I've gotten it. It's very aggressive. I still have to figure out like the settings and stuff because it does beat the shit out of my feet. It's like pounding up. So sometimes my feet are like really sore afterwards. But anyway, guys, I got to run. I've got some FaceTimes. If you are a member of at least the $10 level, make sure to get on that Calendly link, guys, and schedule those FaceTimes for you. I think we leave out of town on the 17th, so I'll be out of pocket for like 4 days. So I won't be able to do any FaceTimes from like the 17th or like the 21st. So other than that, guys, schedule the FaceTimes. I usually start them at noon, from noon to 5 or noon to 6, I believe, something like that. Appreciate you, Johnson. Proper gym in the house is a dream. Have a few bits and pieces in the garage, but want a proper gym one day. Yeah, that is definitely the thing that I am most proud of, is that I no longer have to go to a gym. It saves you like 30 to 45 minutes, guys, just in traveling and getting ready and stuff. Sometimes I work out like barefoot if I want to, wear the shirt, not wear the shirt. I mean, hell, sometimes I don't even wear shorts, like it's just like, fuck it, it's just me. And you get a crazy ass sweat in the garage. It's like 110 degrees in there sometimes. It is really, really awesome. Anyway, guys, I gotta get rocking and rolling. This is TJ, the Wheel Deal, signing off. As always, when your sky stays blue, stock screen. We got 2 episodes tomorrow, guys, in the morning, and then Wheelers in the evening. Still trying to figure out a topic for Wheelers, but I'm kind of leaning into like the poor man covered call or something, because I feel like it's still kind of like real new to people, because that's where the portfolio is going. Is I want to own less shares. I want to buy more leaps, because you can control the shares with the leaps and sell calls against those leaps. And then I can have a lot more capital to sell cash secure puts. I feel like I'll just fare better and make a lot more money. And this 10 will turn because the portfolio will be at 10 pretty quickly, because there's capital injections going and anticipated capital appreciation. And then the goal is to go from 10 to 20. And I just think that I'll go there quicker with more leaps versus owning so many shares. Anyway, appreciate each and every one of you guys. And thanks y'all so much for being members. I hope y'all got value out of this session, and we'll do it again next week. Peace out. God bless you guys.